Are you in the hunt for a great stock to buy? Well, in this video, we're going to do a deep dive into the investment potential for Realty Income, known as the monthly dividend company. Find out if this dividend stock is worth adding to your portfolio or whether you...
Stan, I'm not touching that one with a 20-foot pole.
If we look at what's been going on over the last week or so, the S&P is down by 3%. Realty Income over that same period, it's only down about 1.5%. But then let's have a look out over a month, down over 5. And then year to date, we are looking at being down 22.65%. It's a bloodbath. Run away, run for the hills. What has been causing that? And let's have a look and see whether or not it is something that we potentially want to be looking at investing into. Certainly something that I'm looking at investing into over the long term. So before we go into anything and go into any great detail and looking at dividends and AFFO and whether or not we should be buying or not, let's have a quick look and see who Realty Income even is. It is very much about paying monthly dividends. And in reality, that's where it's got its name. It is also known as the monthly dividend company, and it is something that they have been looking at growing over a long time. If we look at this, they have been growing their compound annual returns since 1994 when it listed on the New York Stock Exchange. And what it has done is it's got a compound annual growth rate of 4.3% over that same period. In the last few years, potentially not quite as high as that, somewhere closer to that 3% mark. Instead of the 639 that's stated there, it's actually 640 months of consecutive monthly dividends being declared. We're also looking at it has over 13,000 different clients in 85 different industries, and not just the US, Puerto Rico, but the UK, Spain, Italy, and most recently Ireland. It is a Dividend Aristocrat because it's been growing its dividends for over 28 years. And also it's on that high yield Dividend Aristocrat indices. Let's have a quick look at how it's been getting on. If we look year to date, we are down almost 23%, and we are very close to that year low of 48.42. And if we have a look, there is quite a bit of upside if we are looking at where the year high was at 68.85. It is looking at dividend yield forwards of 6.22, as high as it's been for quite some time. It's looking at a trailing dividend growth rate of 3.04%, which is okay, and looking at dividend per share growth of 3.63. That gives you a bit of a flavour of where it is as a stock. There are a number of big news articles that there have been over the last few months. One of the big ones being the Bellagio Las Vegas purchase, where they've invested almost £1 billion into purchasing that iconic asset. And they're just some of the key highlights of what they're going to be purchasing with that over the next few months. Also, there has been the share dilution. So they did this dilution of 101 million shares back in July 21. And they are looking at doing this again. And this is an even bigger number at 120 million shares of dilution. What does that really mean for us? If we have a think about a REIT or a real estate investment trust, how can they generate their money? They must put 90% of their taxable income back out to their shareholders. So that only gives them 10% to actually play with to make new purchases. That's not really going to cut the mustard and get them anywhere close to where they need to be buying new investments such as the Bellagio. So what they could do is they could go and they could take debt. And who really wants to be taking out debt at this moment in time when interest rates are as high as they are? So that leaves them really only one other opportunity, and put out more shares. That will obviously have a knock-on effect of driving the price of your shares down, because your shares aren't worth quite as much anymore. But at least it does provide them with that opportunity to go and invest into new markets and new products. And this is sort of what their debt actually looks like. So they have some term loan coming in 24, but the major one coming in 26. Am I particularly worried about that? No, I'm probably not. If we look at whereabouts Moody's and S&P Global are on the credit ratings, they're coming in as something stable at A3 and A-. So they still have confidence in the management within Realty Income. So that's not a major flag for me at the moment. Another thing that we want to be looking at is how diversified are they? Have a quick look at it. Really is quite a high quality diversification. They have lots of different types of companies across different types of sectors. You've got convenience stores and grocery stores along with the dollars, home improvements, etc. This is reasonably well balanced in different types of industries. It's also geographically well balanced. It is majority in the US, but we're also branching out into Europe to get a great foothold. And this is looking at their European portfolio by different industries. So we are looking at groceries making up about 45%, home improvements, general merchandising, and then others. And some of the big names that we will all know in the UK: B&Q, Sainsbury's and Tesco's. And then that just gives you a quick snapshot of that portfolio and how they have been growing that over the past 5 years. Another thing going for Realty Income is it really is a global leader. If we have a quick look at this slide, you can see whereabouts they are growing their international presence. You can see whereabouts they are in the size, scale and quality of the companies that they're investing into. And one of the key things is how resilient are the assets that they actually have, and looking at claiming 91% of total rent is resilient to any economic downturns. And that's because they've got some of those clients in there like the dollar stores and convenience stores, which people will always need to go and use. Also branching out into some of those larger supermarkets in Europe as well definitely helps that. And they have got that 29 years of consecutive years of rising dividends. I always like to show is this chart, and it's a bit of a dream of you just keep seeing those dividends growing over time. If we look at new ways of trying to grow their position and security in the market. Back in 2010, they were looking at new types of property, looking at vineyards, then branching out in 2019, looking at Europe. You're then looking at coming into gaming in 2022, and then vertical farming. Over the last few months, I have been adding relatively aggressively to my holdings of Realty Income. In September, I did do quite a large purchase on the 25th, where I ended up buying into 40 more shares of Realty Income, and I've just continually been adding 5 every so often as that price has continued to come down. I've managed to level out my average purchase price quite well. I am still a little bit down on this holding, so currently sat at about 6.5% down. This is my largest holding, and I have about 125 shares on my Trading 212 account. Having done a little bit of my own research, I do think there is definitely some upside in Realty Income. And if we have a quick look at the predictions for Realty Income, whereabouts that might be, even at that low price of $52, that would still see an upside in the value of my holdings, but it would also see me pulling in that 6.22% yield. If it was to come in at that high end, I'd be over the moon. But let's even just look at whereabouts that average target of 62.80, that would present a 27% upside on the price that we have at the moment. And I'd be quite happy to take even a fraction of that. So while the price is still low, I'm going to continue to keep cost averaging into there, bring down my average price, and hopefully work towards being able to pull in 1 share per month of dividends, which I'll just automatically reinvest back into it and see that continue to grow. With Realty Income on those dividends, just remember as a UK investor, we do have the withholding tax. Make sure you've done all the paperwork to reduce that withholding tax from 30% down to 15%. And then just keep investing and let's see where it goes. If you don't want to invest into individual stocks like Realty Income, you could look at a dividend ETF, and why don't you go and have a look at this video. Thanks very much for watching, and I will see you in the next one. Cheers, bye.